Welcome back to the deep dive. Today we're going to try and cut through the noise on a really big strategic move in the European fintech space.
Yeah, this one is. It's a huge signal for where banking, scale, and specialization are all headed.
We're looking squarely at Italy. A major tech giant just decided it needed to buy the core plumbing that runs the country's mid-sized banks.
And this isn't about buying something flashy. It's about acquiring localized IP, deep client relationships, and, the actual foundation you need to win the next decade of modernization.
Okay, let's unpack it. The news broke on, of all days, Christmas Eve, December 24th, 2025. The global giant Accenture, that's ACN, is acquiring a company called Cabel Industry from the Fibonacci Group.
Right. And what you need to understand first is who Cabel Industry actually is.
They're probably not a household name for most of our listeners.
No, not at all. They're a highly specialized Italian tech company. They provide core banking systems and IT managed services, mainly for Italy's mid-sized banks, credit unions, that sort of thing.
The backbone of the local economies.
Exactly.
And this is a big deal in terms of talent, too. It's not just software. They're integrating about 200 of Cabel's professionals directly into AFAST.
AFAST being Accenture Financial Advanced Solutions and Technology.
Right. Their specialized tech center in Italy. And the stated goal here is to really boost their managed services and speed up tech adoption for that whole mid-market. They seem particularly interested in credit management.
Said so much, When a global player like Accenture decides it needs to bring in 200 people who just get the complexities of Italian banking regulation.
Yeah.
We don't have the financial terms, which is pretty normal for a strategic play like this. But the goal is crystal clear. Accenture is buying market access and a solution for technical debt all in one shot.
Okay, so now that we've got the snapshot, let's get into Cabel's competitive edge. Why was this regional player so attractive that a titan like Accenture had to have them?
Well, Cabel is not new. They've been an ICT service provider since 1985.
Wow, since 85.
Yeah. So they've spent 40 years building out this fully integrated banking IT suite. They're a whole network, really. 14 companies, around 400 people total, doing everything from IT to capital markets. They're the definition of an incumbent specialist.
So it's not just a software license. It's an entire end-to-end operational solution that's already localized.
That's the key. Their platform is based on Oracle FLAXCUB.
Which is a big global system.
A huge global system. But Cabel took that and meticulously localized it for all the intricate rules and, customer expectations of the Italian market. And they did it with an open banking approach.
That localization part is everything. Because if you're a mid-market Italian bank, you want the power of Oracle, but you can't possibly afford the time or complexity of adapting it yourself.
You can't. And the results speak for themselves.
Yeah.
There was a case study with Bonka after they adopted Cabel's platform that just simplified everything. The real kicker was the product development cycle.
What happened there?
Things that used to take months of bespoke coding could suddenly be done in a few hours, just by the bank's own people, using the platform's existing parameters.
That's the game changer right there. That's how a regional bank can suddenly compete with a fintech startup.
Exactly. And beyond just the core system, Cabel was solving these huge pain points for regional banks. I mean, things like high costs, aging infrastructure.
Tell me about some of those solutions. I saw you mentioned something about digital channels, which is where a lot of these smaller banks really lag behind.
Oh, absolutely. I mean, think about just expanding your territory. Opening a new physical branch is it's prohibitively expensive now.
For sure.
So Cabel introduced Bonka Cloud. It lets banks move their entire client acquisition process online. Remote ID, digital signatures, all of it. You can open an account on your phone without ever stepping into a building.
That feels like table stakes now, but for a regional bank, that's a huge leap.
It is. And they even had a creative solution for the physical presence problem.
The Bonka thing.
That's the one. It's a virtual branch concept. It comes in a box or a totem version. It lets a bank put a footprint in a new town with a remote operator for a tiny fraction of the cost of a full branch. It's a brilliant efficiency hack.
So Cabel wasn't just selling software. They were selling operational survival tools tailored for Italy.
Precisely. And let's not forget the area Accenture specifically called out, credit management. They built a platform credit monitoring.
Okay, what does that do?
It's a web app that supports the whole credit process, from granting to monitoring. And crucially, it helps prevent deterioration.
How does it do that? That sounds pretty sophisticated.
It is. It uses over 300 different indicators, client data, performance metrics, and this is the key piece of local intelligence. It plugs directly into external data from Served.
And for anyone who doesn't know, Served is basically the major credit bureau in Italy.
It's the biggest. And integrating that kind of highly regulated data is incredibly difficult. Cabel owned that connection. That specialized, compliant credit risk infrastructure is a massive strategic asset for Accenture now.
That's a fantastic point. But here's the friction, right? Cabel's value came from its deep, local, personalized service. Isn't there a risk that by bolting this onto a global machine like Accenture, you dilute the magic?
That is the central paradox.
Yeah.
But the CEO of the Fibonacci Group, Andrea Patinelli, he basically gave the answer himself. He said that innovation in banking now depends on one thing: economies of scale. The cost of just keeping up with technology, with regulations like GDPR and PSD2, the sheer price of fixing tech debt, it's just too high, even for a successful regional specialist.
So they had to sell their brilliance to a firm that could absorb the massive operating costs. The specialization is valuable, but the overhead becomes unsustainable.
It's a self-reinforcing cycle. Accenture buys Cabel to sell scale, and Cabel sells because they know they need the scale of a global corporation just to stay in the game.
And this move fits right into Accenture's playbook in Italy. This isn't their first big buy there, is it?
Not even close. This is their 8th strategic acquisition in Italy since just 2023. They've been buying up capabilities across the board. AI firms like Amagama, public sector expertise, 5G network companies.
So they're basically assembling the ultimate IT infrastructure provider for the entire country's modernization.
Yeah.
They're buying up all the necessary local parts.
That's the goal. Become the indispensable partner. And you have to look at the scale of the prize. Accenture already has a 300 million euro 3-year deal with the BCC Icaria Group.
And that covers how many banks?
114 member banks.
Yeah.
And that project is all about core banking modernization. So the Cabel deal is a targeted strike to strengthen a key vertical credit management within that massive existing project.
Let's shift to the broader investor context then. What does this acquisition and Accenture strategy tell us about the future of banking?
It really highlights a paradox that Accenture itself talks about. For the last 25 years, digitization made banking efficient, but it also, it stripped away the human relationship.
The ATM and the app made things fast, but cold.
Exactly. Your bank became a utility, not a partner. And the big promise of generative AI now is that it can actually reverse that trend.
How so?
By enabling hyper-personalization. It can restore an almost empathetic level of customer experience. It helps banks anticipate your needs instead of just selling you products.
And Cabel's modernized core platform becomes this AI-ready foundation that Accenture can now build that personalization layer right on top of.
You got it. And the market data is screaming that this is the right strategy. Something like 78% of financial institutions say AI adoption is their top priority.
And Accenture is cashing in. Their advanced AI sector is it's booming.
I mean, they just reported $1.1 billion in revenue from that sector alone. That's a 120% increase year over year.
Wow.
It just confirms the theme. Scale matters more than ever. The cost to develop and deploy industrial-grade AI and modern banking systems is so immense, only the giants like Accenture can really afford to do it.
So by buying a firm like Cabel, they take out a competitor, grab specialized knowledge, and secure a huge chunk of the market all at once.
Right. And as a backdrop to all this, their latest earnings were strong. First quarter revenue was $18.7 billion, EPS at 3.94, both beating estimates. Analysts are raising price targets. It's the picture of a giant positioning itself to be the outsourced brain for a huge part of the global financial system.
Which brings us, I think, to our final segment, the outrageous but plausible trade idea.
All right, let's do it. But first, disclaimer. The following is for educational and entertainment purposes only. We are absolutely not financial advisors. This is not financial advice. Please do your own due diligence.
Okay, the thesis is clear. Modernization is speeding up, and the gap between the banks who outsource to firms like Accenture and the laggards on old systems is getting wider, fast.
So we're looking at a classic paired trade based on this structural shift. It would be long Accenture, ACN, short a basket of European regional banks.
Okay, lay out the long side for us.
Yeah.
Why long Accenture?
You go long Accenture because their targeted M&A, like this Cabel deal, combined with their massive investment and proven execution in AI, positions them to just capture a disproportionate amount of revenue from this global banking reinvention. They are becoming the essential high-margin utility for modernization.
And the short side, where's the pain?
The short side would be a basket of European regional banks. specifically Italian midcaps, who are not Cabel clients, the ones known to be stuck on expensive, monolithic legacy systems. The thesis is that these institutions are technologically stranded.
And how does that translate into their stock underperforming?
It's a multi-front problem for them. Their operational costs will stay sky high compared to their modernized peers. They'll struggle with new compliance demands, which means more risk, more fines, and they can't integrate new tech, so they just lose market share.
So the efficiencies that a deal like this provides to Cabel's clients will just accelerate the decay for everyone else.
It widens the competitive disadvantage, which should translate directly to stock underperformance over the next, say, 3 years.
So Accenture uses its scale to absorb specialized knowledge, and the regional banks that don't get on board just can't keep up. This deal really shines a light on that divide.
It really does.
So to recap our deep dive, Accenture is planting its flag even deeper in the European digital core by buying Cabel Industry. They're leveraging specialized Italian expertise to create a scalable, AI-ready platform for the next wave of financial services, proving once again that in modern IT, scale is everything.
And that leads to the final provocative thought for all of you listening. The Cabel chairman explicitly said innovation depends on economies of scale. So you have to ask yourself, how long can any highly specialized, geographically focused fintech operate independently before they must become a target for a giant like Accenture just to afford the compliance and tech upkeep required to stay relevant?
Something to think about. Thanks for joining us for this deep dive. We really appreciate your time. And remember, any discussion of trades is strictly for educational purposes.